As the opening bell rings and the ticker tape flickers, Advanced Micro Devices trades under the microscope of Wall Street, hovering in a high-stakes consolidation zone where retail sentiment swings wildly between hyperbolic moonshot dreams and premature despair. Scroll through financial media headlines or pop open trading apps, and you will see an endless barrage of surface-level commentary reducing AMD to a single reductive narrative, the perennial underdog perpetually chasing a monolithic titan in the artificial intelligence hardware race. Standard financial pundits love to anchor their entire thesis on quarterly GPU shipment beat or miss metrics, treating the stock like a volatile consumer discretionary play while entirely bypassing the deep structural reality of modern silicon engineering. What the mainstream completely misses and what institutional capital quietly positions around during high-volume dips is the brutal, unyielding physics bottleneck of the modern data center. We have officially slammed into the walls of traditional planar scaling and thermal dissipation limits. When hyperscalers like Microsoft, Meta, and Alphabet spend tens of billions of dollars constructing massive clusters of training and inference nodes, they are not just buying raw compute power, they are wrestling with the agonizing laws of electrical resistance, die yield constraints, and high-bandwidth memory routing. In this era of trillion-parameter large language models, the true competitive moat is no longer just raw clock speed, but advanced packaging architecture, chiplet interconnect bandwidth, and software ecosystem stickiness. While retail traders panic over minor macroeconomic jitters or interest rate whispers, institutional heavyweights understand that AMD is fundamentally re-architecting how heterogeneous compute units communicate at scale. The market mispricing lies precisely in this temporal disconnect. Retail capital prices AMD as a tactical trade, reacting to short-term data center revenue growth rates, whereas long-term smart money recognizes that under the leadership of Dr. Lisa Su, the company has methodically transformed into a structural gatekeeper of high-performance computing, deeply embedded in the secular infrastructure layer of the global digital economy. The daily trading volume tells a masterclass story of market mechanics, pitting algorithmic volatility against calculated institutional accumulation. Every time macroeconomic jitters or lukewarm guidance triggers a sharp sentiment-driven pullback, retail traders, fatigued by the endless tug-of-war against entrenched monopolies, tend to capitulate, flooding order books with stop-loss triggers and exit orders. Beneath the surface noise of intraday price swings, institutional heavyweights deploy algorithmic block trades to systematically absorb that floating retail supply, quietly building massive multi-year secular positions during periods of maximum apathy. This structural handoff from weak hands to patient institutional capital is the hidden engine driving major multi-year secular breakouts. Wall Street's elite do not care about the emotional panic of a single earnings cycle. They are modeling out 5-year cloud capital expenditure trajectories, silicon on package yield curves, and enterprise adoption velocity across hybrid cloud architectures. They know that short-term volatility is just the toll collector charging a tax on impatient capital. Consider this dynamic in your own portfolio allocation strategy. As you watch the tape swing violently from red to green week after week, are you letting short-term price action shake you out of a generational hardware shift, or are you methodically scaling into structural pullbacks alongside the smart money? Drop your current accumulation strategy or target entry zones in the comments below, and let's dissect whether you are holding firm for the long haul or waiting for a deeper shakeout. To truly grasp why Advanced Micro Devices commands a premier seat at the table of modern high-performance computing, one must completely discard the outdated historical framing of the company. For decades, Wall Street pigeonholed AMD as a low-margin, capital-starved commodity clone of Intel, surviving entirely on price-cutting strategies in the legacy personal computer and low-end consumer CPU markets. That nostalgic characterization is not only obsolete, it's financial hazardous. Today's AMD is an engineering powerhouse operating across four highly diversified, high-margin pillars: data center, client, gaming, and embedded systems. The legacy client business, once vulnerable to the brutal cyclicality of consumer PC sales, has been radically supercharged by the Zen microarchitecture roadmap, which systematically dismantled Intel's historic manufacturing and architectural dominance in both desktop and server landscapes. Meanwhile, the strategic acquisitions of ATI Technologies and Xilinx transformed AMD from a pure-play CPU maker into a comprehensive heterogeneous computing titan. Through the integration of Xilinx's industry-leading field programmable gate architectures and adaptive system-on-chip platforms, alongside high-performance Radeon graphics architectures and Instinct accelerators, AMD now commands a proprietary trifecta of CPUs, GPUs, and adaptive logic. This combination allows the company to deliver bespoke, optimized silicon solutions to hyperscale cloud providers and enterprise data centers that demand extreme workload acceleration. The old narrative of a desperate, debt-laden competitor playing catch-up has been thoroughly replaced by a high-margin product mix where enterprise EPYC server processors command substantial market share in cloud data centers, fundamentally altering the company's structural free cash flow profile and margin floor. Looking past the immediate horizon, the multi-year growth catalysts for advanced micro devices are anchored directly to the insatiable global demand for artificial intelligence infrastructure, high-performance computing, and advanced packaging innovations. As hyperscale cloud providers ramp up capital expenditures to build out sovereign AI clouds and enterprise-grade generative intelligence platforms, the industry faces an acute supply chain bottleneck centered around advanced packaging technologies like CoWoS and high-bandwidth memory integration. AMD's Instinct accelerator roadmap, highlighted by cutting-edge iterations designed to compete directly in the massive GPU training and inference markets, positions the company as the primary alternative supplier in a duopolistic, high-end AI chip market, where customers are desperate to avoid single-vendor lock-in and supply chain choke points. Furthermore, the embedded segment, bolstered by the deep industrial, automotive, aerospace, and medical device integration of the Xilinx portfolio, provides a massive sticky baseline of recurring high-margin revenue that cushions the company against traditional semiconductor cyclicality. Yet these monumental opportunities are not without substantial risks. Geopolitical friction surrounding semiconductor manufacturing supply chains in Taiwan, tightening export controls on advanced AI hardware to key international markets, and the relentless capital expenditure cycles of mega-cap tech spenders introduce lingering structural uncertainties. If hyperscalers ever signal a sudden contraction in cloud infrastructure spending, the entire semiconductor sector faces a rapid valuation multiple compression. However, looking past this short-term price noise is essential for any serious investor. Short-term traders trade price action, but structural compounders focus on engineering execution, architectural roadmap delivery, and secular tailwinds. Advanced micro devices has proven time and again that under world-class engineering management, it can bridge the gap between complex hardware realities and massive market demand, making it a foundational cornerstone for portfolios built to weather near-term turbulence and capture the long-term wealth creation of the digital age. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly.